Let's go Chrome tab. Welcome, guys. This is Forensic Forex with Deontay. This is Forex Fridays, and we do this almost every Friday night. Recently, I haven't been because farming has picked up here in New York. The weather's getting better, so we're growing crops, transplanting, fertilizing, pest management. A lot of stuff is going on at the farm. So I haven't been really putting out a lot of content, been working hard in the fields. But we're still looking at the charts anyway. So some of the topics that we're going to go through tonight, we're going to be talking about the weekly range review. So NFP weekly range, because this week was NFP. We're going to be talking about DXY, GU, and USWSI. Not that we pick those pairs for any particular reason. I like to shuffle it every Forex Fridays so that we have a spectrum of different pairs that we're looking at. Then we're going to look at April's Asian session model results and probably look at very unique examples that were, astounding in their performance. And then last, we're going to talk about GU May Speculations. So if you don't know, GU is the new pair that I'm going to be trading for the month of May. And we'll talk about how I filtered out and picked GU. And a bonus as well, I was going to do GU and gold. Not a lot on gold, but a little bit on gold. But let's get right into it, man. And then we're going to be starting a new series as well. So, new series is NFP series. So, stay tuned for that this month. We're going to be doing NFP examples and how you could potentially trade NFP. It's possible, and you guys will see in this first topic. So, first topic that we're going to begin with is the weekly range review. So, as always, right, if you're a returner, you guys know exactly what I'm going to talk about. I sound like a broken record. Everybody should have this one price line on their chart. And this price line is Sunday's opening price. So I have an acronym for it. SOP, Sunday's opening price, interchangeable with weekly opening price. Now, if you don't have Sunday's opening price, use the midnight opening price at Monday. It's normally not going to be a big difference, but if you don't have Sunday's data for some particular reason, you use Monday's opening price as your line in the sand for overbought and oversold condition. This is your natural price indication for oversold or overbought. You don't need an indicator to tell you. Price already communicates to you what it's doing. It's up to us as the operator to translate and understand what the price action is doing. So as soon as price gets above Sunday's opening price, it is in a overbought condition. It's much more expensive. When price drops below the opening price, it's in a discount. It's cheaper. Remember, the opening price is fair value. That's the opening bid. So it's very influential on price. It's significant. Just looking at the chart, if we take this off, it looks like a whole bunch of nothing. But when we start to add a little bit of context to it, we put the day dividers on and we put Sunday's opening price on the chart, it just turns into a whole nother thing. We start to comprehend exactly where the market is most likely going to buy and sell. Now we know out of the 3 days of the week, Monday, Tuesday, or Wednesday may give you the high of the week if bearish. We can see that this month finished down. Well, this week finished down, correction, and the high of the week landed on a Wednesday. It could have landed on a Tuesday or even possibly a Monday at times, but preferably it lands on Tuesday or Wednesday. That's my building blocks to a bearish week. I just take that profile and I run with it. Now I know there's many different weekly profiles that many people are maybe familiar to or have been exposed to through ICT, but I prefer to keep it very simple. Monday, Tuesday, Wednesday. If I'm going into this week bearish, I need to either find a selling opportunity mainly on Tuesdays and Wednesdays during one of the kill zones. And you'll see as we go along with the other pairs in the lower time frame, you'll see the examples of where you can find the shorts and the longs. But just looking at this overall, we see the high of the week is on Wednesday and the low of the week comes in on Friday. Very interesting. So NFP was definitely a volatile move for the DXY. It shot down. A lot of the dollar pairs went down for NFP. So let's move on to the next currency pair. And I believe that is going to be GU. Same thing, nothing changes. Now we're going to be looking mainly at Monday, New York session, Thursday, London model, and then Friday, New York model. So NFP. So there's an NFP model. It's definitely possible. And the way I'm going to show you is exactly how I trade almost every single kill zone. but you need to have certain things aligning. So let's go through Monday. So New York model. So for those that are unfamiliar with the New York model, the way we frame it is from a 15-minute time frame. So we go down to the 15-minute time frame, and we're using a specific time, which is the dead zone, which is going to be from 5 a.m. to 7 a.m. So this gray shaded area, right? I have my indicator set to give me that time zone. So 5 a.m. to 7 a.m. Move it forward one more. 7 a.m. is going to be the London lunch, this period right here. Let's put a line there, a line here, and a line here. This time period, I do not like to trade. To me, you're most likely going to get two phases. Most likely it's consolidation, or you're going to get a deep retracement inside the dead zones. It's either a consolidation or a deep retracement that you're going to get inside this time window here. So don't look to find intraday trades here. Not saying that there isn't any scenario possible here. It's just unlikely. You have a better chance of finding a better setup and a low-hanging fruit setup during the kill zone. So we're utilizing 5 a.m. to 7 a.m. as our dead zone, as a liquidity pool. So we're giving this context. We're not randomly jumping in here and saying, okay, well, let me draw a box here, right? Resistance. Oh, let me draw a box down here. Support. No, we're not doing that. We have objective measures. That's the difference here. We're trying to be very objective. Retail is very subjective. Trend lines, indicators, all these other things, and all the values that are subjective to the operator. The trader may view it differently. We may view support and resistance very differently, but we can all agree that we know this swing high and this swing low. We know that's sell side and that's buy side, and that's exactly what we're looking for. We need liquidity. So let's get that on the chart. So we got this swing low, and we got this swing high. This is sell side, and I like to color code it. I like to make my sell side blue and my buy side red. That's just how I do it. This is sell side liquidity, and this is buy side liquidity. Keep in mind, we have Sunday's opening price. Now, this is where I'm going to ask some questions and engage the chat because I don't want you guys falling asleep just listening to me. Where is price right now? According to Sunday's opening price, is it overbought or oversold? Good morning. Someone in the chat. It's in a premium. Correct. Shout out to the chat. It's in a premium. We're above Sunday's opening price. It is overbought. Correct. Thank you, chat. Great job, guys. Excellent. We're in a premium. So our mind as a trader is more likely going to say seller. I want to more likely pick up the seller's hat and put it on rather than picking up the buyer's hat and putting it on. I'm more likely going to reach for leaning towards being a seller, not a buyer. There are times where price does buy above Sunday's opening price. We all can obviously see that. It clearly was trending up here. But before it got here, it was below Sunday's opening price here. That's a smash candle too. For those that know, this is a smash candle. So it comes down, closes low, price returns back to the high, continues trending. The New York model is going to use other confluences outside of 7 a.m.'s opening price. You need to at least have a triple or double confluence. That's what I'm looking for. I don't like to see one confluence. I like to see the double or triple stack. So here we have 7 a.m. And that same ideology that we just talked about, Sunday's opening price, is occurring here during the kill zone in itself. So it's a fractal idea. This is also fair value because it's the opening bid of the kill zone. Anything that's above here is a premium. Anything below here is a discount. So we know for sure if we had to sell for this New York model or this New York session, we would have to more likely find that sell above this line here. We don't want to find the sell below 7 a.m. It's counterintuitive, right? It's counterproductive for us to find a sell in a discount. The whole point of being a seller is to wait for price to get as expensive as it can and then sell to a buyer. For every buyer, there's a seller. And I want somebody to buy my orders from me at a higher price. because I'm going to sell it to them. That's the whole idea. I'm going to sell them my orders so that price goes lower. They can hold GU at a higher price because I think price is going to continue going lower. So I'm going to get rid of it to the buyers. And that's what we're waiting for. Now, let's take the other confluence. So we have a double confluence. The other confluence is what? Midnight opening price. When you start to see this, it really starts to open eyes. When you start to look at it from this way, you start to add these natural price indications. We're not talking about 90-minute cycles here on my channel. We're not talking about major PD arrays, right? We're just talking about structure. Can you guys hear me? I think the Wi-Fi went down just a second ago. Ah, okay. Thank God. At least it's recorded. I could still clip it together. Where did I leave off? We just got a new Wi-Fi, so didn't think about that. Chrome tab, lab work here. Where did we leave off? Okay. We have a triple confluence here. We have midnight opening price, right? For the day, we're overbought. We got the weekly opening price, we're overbought as well. We got 7 a.m.'s opening price, so we're overbought in 3 conditions here. 3 out of 3 right now. So it's yelling sell. Not saying you're guaranteed to get a selling opportunity, but you should more than likely look for that opportunity to unfold. We're not going to force it though. We're going to look for particular things in the market price. So since this is buy side liquidity pool and this is sell side, we also have another swing high here. We'll zoom in for those that are blind like me. I don't know how I don't wear glasses yet, but sooner or later I will. We got sell side here too. Once again, to recap, this time period that we're drawing here is 5 a.m. to 7 a.m. That's right between the London session and the New York session, right in between that moment of time. That's where we're framing our swing highs and swing lows that are unbroken as our liquidity pools. In order for me to sell, I need to see counterparty liquidity pools taken. I want to see buy side taken. So let's see what happens. Let's play it forward. Right there, we got a purge. There's a purge on buy side, and we're above the weekly opening price, and we're above the midnight opening price and the kill zone's opening price. At this point, for my model and the way I like to trade, this is just my style. I go from the 15-minute time frame, I go straight down to the 1 minute. Now you could go down to the 5, 3, 2, 1. I prefer to just go straight down to the 1 minute. What I'm looking for in that particular sequence is raid buy side liquidity here, be above 7 a.m.'s opening price. Okay. We also have the other confluences, of course, but when we're pertaining just to New York session, we are above 7 a.m.'s opening price. We just rated buy side liquidity during a dead zone here. Now we're looking for a fair value gap that runs a swing low, and the swing low is inside the fair value gap. Before, my old entry technique was the first fair value gap to form, which would be this, the first SIBI, right? A sell side imbalance, buy side inefficiency. It would be the very first fair value gap to form. That used to be my entry technique. So if you go on my channel and you look at Forensic Forex New York model, this is what I would be teaching you in that episode or in that lecture, that mentorship video. I would go short here, 15 pips for 15 pips, and look to see if I win or not. And that at times was a great entry idea, and it can still be. Not saying it isn't, but now I realize I like another entry technique, which is a little different. We're gonna leave this on the chart though, just to show where this entry could have gotten us potentially. We'll leave it like that. Play it forward, and we're waiting, and we wait, and we wait, and we wait. You see, price runs all the way back down to what? 7 a.m.'s opening price. Play it forward again. Keep playing it. And we don't have any run, right? We don't have a run on a swing low. There's no fair value gap going through any swing low yet. So we patiently wait. We still haven't ran sell side yet. And we'll play it forward for video's sake. We'll zoom in. So we finally get back to that original fair value gap. So that would be where the short would be in. But we're still waiting. We still don't have the entry idea that I'm looking for. And there it is. Very small. But you got to pay attention though. There's a swing low. 1, 2, 3. We can all agree that's a swing low formation. Yes? Yes. Why? Because the low here is lower than the candles on the left and the right. It only takes 3 bars. That's a swing low. 1, 2, 3. This is the swing low, this low here. So we mark this off. And we stalk this swing low. We want to see if this swing low gets ran through with speed. That's what ICT was trying to teach people. What do new traders need to look for? New traders need to look for areas of speed because that's where you're most likely going to enter. And there we go. We have a fair value gap. Let's mark this off here. See how this entry idea is completely different from the first one? Yes, there's a BPR here. Yes, I know there's a balanced price range here, but we're not referencing that. Look at just the fair value gap to the downside here and the fair value gap to the downside. The only difference here is there's a swing point inside of it. That is where I really truly think at times the markets are just really indicating to you that they're going to go short. It's a fingerprint. The whole hence why my logo is a fingerprint or a footprint, it's something it leaves behind in the market that should allow you to potentially get in trend with the market. Let's play it forward. But how would we set up this short idea? Why did this move? Yeah. We would shut the short up like this. So we wait for price to return back into that fair value gap, right? Institutional order flow entry drill. We want to see price tap into that fair value gap. As soon as it taps into it, we're going short. So we'll play it forward. There we go. Right there. We're in short now at this point. At this point, the trade would be live. We would take a long there. Right? It would look something like this. Let's say I press sell. I'm just pressing sell on the demo thing, right? We would sell there on whatever this is here. And then we would hold. And there we go. TP hit. And that's what we would use, right? That's exactly how we would do it. All the way down there, and we call it a done deal. Of course, I know it says $1.13. I didn't set up the risk, of course, but I'm just showing you how you would have executed that trade there. Sell there, back down. Look at where price pulls itself, right back down to 7 a.m. Look at the quality of the short, though. We're selling at a premium above 7 a.m. Now, you can also see how this short idea could have still been a feasible idea as well. I just want to add that in because a lot of people say, what about the old entry technique? It could still be a feasible entry. Right now, personally, I don't use it anymore. I wait for this now. I'm just being very consistent to one entry. You do the same thing every single time, you're not going to get confused because you know what you're looking for. But if you're worried about this weekly profile and this PD array and this 90-minute cycle and this CLS window and this, it could be a lot at times. And a lot of those things don't fit together. Sometimes it's very fragmented and they just don't flow together. So certain things, certain ideologies just don't fit together. But you could blend them, but you will have difficulties because you're trying to keep a lot of information in your head. I'm trying to keep it as simple as possible. And we'll play it forward. Right back down into what? Midnight opening price. Just keep playing it. So that was the first sell side that we had here. That sell side liquidity on the 15-minute time frame hit. So we went purge, back down to sell side. Now we're going into, what is this? London close right now. And I just want to see if it gets back down there. And it doesn't. Let's see. It stops us. most likely stops us out. Yeah, it's most likely going to stop us. Now, see, this is why you got to pay the trader. You can't always be expecting that everything is going to be a home run. Everything's not a home run. Sometimes you will catch those home runs, right? You catch the tiger by the tail and price just goes flying, right? It runs away, you caught the trend and it trends all the way down. But with data, oh, man, this is why like you gotta be anecdotal, bro. You gotta collect data because the data just tells you what days are more realistic for certain ideas and for you to hold trades, which is why I'm very crucial with tracking the Asian session model. Everything that I do, you can do for another kill zone, and we'll get to that. But that's the New York model on the 15-minute time frame for GU this week. And this is during NFP week. So you definitely can have trades. But remember, we framed that context there. We we framed the context. We were overbrought. That's the whole idea. We were overbrought. We rated counterparty liquidity pools and we went short. Hey, somebody said they caught that one. Nice. Additional conflict. And we had an SMT diversion too. So there's so many things you could be looking at. But if you're very focused in and narrowed in, you may not be looking at the confluences and the SMTs. But if you stick to one pair and you stick to the same framework every time, in the long run, you're going to be a better performing trader. It's just inevitable. That's just how it goes. Let's play it forward. So we're going to go to Thursday. I really hope the internet does not cut out again because that is a problem for me, not you. I mean, it's a problem for you guys too because it's not respectful, but what are you going to do, right? Things happen. Before we continue, I just want to say shout out to everybody that's in the chat. Shout out to everybody that made it out here tonight. You know, it's Friday night here in New York. We could be doing a lot other things tonight, you know what I mean? But instead, a lot of you guys out here trying to get this game, get this knowledge, you know. And yeah, London model. Let's get it. Same thing. Appreciate you, fam. Appreciate you guys, man. I really do. I want you guys to win. I want everybody to win. Give, 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 give. That's all you got to do. Give. You should come back to you, right? So the London model is exactly the same as the London model. This is a Thursday, so another ideal trading day. So Tuesday, Wednesday, Thursday, ideal days to trade. The dead zone though is different. The dead zone that we're going to be using, I think it's this one. Nope, there we go. The dead zone that we're going to be using is going to be from midnight to 2 a.m. right here, 2 a.m. I call this the Asian lunch. So 12 a.m. to 2 a.m. We're going to look for all our liquidity pools here via 15-minute time frame. We have this swing low here that's unbroken. We also have, I think this low, I think this low is lower. He's got a swing low there, and we don't have a swing high broken going into 2 a.m. or going into the London session. So instead, what I do in the situation like this, when it looks like this, I just take the candle at 2 a.m. on the 15-minute time frame, and I make that my buy side liquidity pool. Now, many people will debate and say, well, is that a feasible or realistic buy side liquidity pool? I do think so, and you'll see here because it performs as well. As always, what are we going to mark off? The opening price. We like to put that on the chart because it makes things a lot more clear. We understand when we're overbought and oversold. There's no more confusion anymore once we put that line on the chart. Right now, we can see price pushes up. It's overbought. It's over 2 a.m.'s opening price. We're also confluence. We're also above Sunday's opening price, the weekly opening price. So once again, weekly, we'll just put SOP. Sunday's opening price. That's the acronym there. So we're above Sunday's opening price. We're also above midnight opening price, coincidentally, right? This is midnight. It blends in with that blue line, but I'll draw it all the way out so you guys can see it. That's 12 a.m. So we got another triple confluence on the day. Price comes up. Let's see what happens. It raids buy side here. We're very overbought now. We could also be now. I know people may ask, what about the liquidity pools outside of this dead zone? Yes, they're probably still influential to price. What is it doing? It's just liquidating. It's liquidating the orders. Even if it's not the liquidity pools that we framed here, Of course, price is going to take out other highs outside of that too. But am I really concerned about them? Not so much. As long as I get the raid on the liquidity pool that I framed for myself during the dead zone, I'm happy. I know it may run a little higher, but we're not going to chase that. We're stalking our setup. At this point, are we looking for longs or are we looking for shorts? Now, this is a question for the chat. Just trying to engage you guys, Are we going to look for longs or are we going to look for shorts here? We're going to look for shorts. The longs would be unrealistic, really, pretty much. Everything right now is pointing to us telling us shorts, fam. We not looking to buy. We don't want to buy at higher prices. It's just so much more expensive. Why buy at a higher price? Wait for price to get cheap again, then buy. It's the same idea with stocks, right? Value investing or waiting for the right price. You wanted to get into Tesla or Apple, right? But they're so expensive. Are you going to get into it when it's like $200, $300 a share? Or are you going to wait for it to drop to like 150 a share or lower? You're going to wait for it to drop so you could get the cheaper buy on the shares. You don't want to buy at higher prices. You may dollar cost average, right? You might pick up a little couple stocks or shares here and there, but nothing heavy, no bulk orders. But as soon as, like, let's say a recession happens tomorrow, God forbid, and all the markets crash, you don't think all these millionaires and billionaires investors are doubling down at these cheaper prices? Of course they are, because it's cheap. Why not? If you can afford it, buy it at a cheaper price. And that's how you would play the game here in Forex as well. It's the same idea. All markets are the same. They have the same core principles. We're looking for a short here, 1 minute time frame. We're going from the 15-minute down to the 1 minute. Once again, you can go to the 5, 3, 2, or 1. There might be that same entry idea that I'm talking about, or there might be another entry idea that you like and you take it. But use this framework. It's going to more than likely put you on a quality path, a more quality entry. So you see that's that high here because we marked it up at 2 on that 2 15-minute candle. It's over here, right here. That was the highest point at 214. That was the highest point before 215. So that's the high. It raids it. Good. Now what are we looking for? We need to see that fair value gap and a swing point in between. Let's see. Look at this speed. That's speed. That's major speed to the downside. This is what ICT tells people to look for. He was telling all the new traders, what should new traders be looking for? You're looking for dynamic movement in price. This is the dynamic movement in price. This one's very obvious, screaming at you, telling you, wake up. There we go. Fair value gap. Do we have our entry idea? Yes, we do. Here it is. And there goes the swing low inside the fair value gap. And we would go short. As soon as price taps right into that, right? Institutional order flow entry drill. Price taps right into that, we go short. We're not trying to predict how far it's going to go inside this fair value gap. Because some people may say, oh, it's such a large fair value gap. You sure you want to take that? Yes, I'm going to take it. I'm going to take this. It's above 2 a.m. after rating buy side. If we had to also mark off the old entry idea, it would be here. This is the first fair value gap that forms right there. But that's not the one we would take. But you see how this entry still gets you close to the answer as well. Both of them, pretty much. What would we do? Same thing. We would go short here. Is the magnet tool on? It is on. We would go short here. 15 pips. How did I arrive to 15 pips as my standard procedure? I'm not quite sure, to be honest. Some things just happen. You just think and you're like, oh, maybe 15 pips. I found that 15 pips was a very reasonable stop loss intraday for me. And I wait for price to tap right into it. There, we're short. We're short. Played all the way through. Done. That's it. This is the easiest thing for most traders to comprehend. It's a very simple idea. It doesn't look like much. It doesn't look like much. It's not flashy like what other people like to try to educate and teach people on. It's not like this huge mystery. You know what I mean? Because there ain't no mystery here. I'm telling you every single step and how to get to it. There's no sugarcoating. There's nothing I would hide from you guys because this is exactly what I do. Yeah, the 15. Yeah, exactly. Someone said in the chat the 15 pip stop loss gives room, less stress. I'm okay with taking 10 pips into drawdown. And before we even get into the stop loss scenario, right? It's all about how much you're risking. Many people can't hold to the stop loss because they're risking too much. If you can't hold a trade all the way to your stop loss, that means you're over leveraging. Right? You start getting antsy, you start getting a little bit anxiety, nervous, you start tapping your foot, biting your nails, whatever it is, the symptoms or signs of you being under stress and you knowing that this trade that you put on was way too much. You shouldn't have to go through that. You should be risking properly every single time. So this trade idea, you should be risking 0.5%, 1%, 2%, 3% is the max. You know what I mean? People are very aggressive when it comes to trading, which is why a lot of people fail. They're trying to win the lottery ticket every single trade that they take. That's not how it works. It is a marathon. I'm telling you, life is a marathon. We're not sprinting to be the first person at the end of the line. We're trying to get there with less pain, less stress, be healthy as much as possible before they put us in the grave, right? We're not trying to sprint to the end of life. Life is slow, it's tedious. There's a process to it. People are trying to get instant gratification. They want to instantly, oh, I made $5,000 today. I made $10,000 today. That's cool. But $10,000 can come and go that easy, especially if you have poor habits. And that's the trade idea, man. That's your London model right there. Clean as day. Look at all the triple confluences again. 2 a.m., we're above midnight, and we're above Sunday's opening price. What more could you ask for? What more could you ask for? Got that triple confluence again. Sometimes it's only a double, but I would prefer you have a double than a single. The more the better when it comes to these natural indications here. So you can solely just wait for these things to line up and then take that shot when it shows itself. The only reason we took the shot was because the entry showed itself. There are some days where the entry does not show itself at all. It happens. There might have been other entry techniques like the first fair value gap that forms. Take that one, then go short. But let's say we weren't looking for that entry technique. We were looking for this one, fair value gap that has a fair value gap inside of it. What if this doesn't form? Do we still take the short? No. Why? Because we're just trying to be disciplined and consistent. We're not trying to build bad habits. You got to do the same thing over and over again. Just repetition. Shoot the free throws over and over again. Stop changing up your cadence or the way you dribble the ball. You want to dribble 2 times before you pick up the ball and shoot the free throw. Cool. Keep that as your routine. Don't do two dribbles and then one day you start doing one dribble, or one day you do no dribble. You want to keep it a routine every single time. Everybody has a way they want to do it. You got to have one way you do it every time. You're only going to progress so much better because you're so much more focused. People want 20 different models, one model. That's why I preach. That's the only thing that I have on my Twitter, and that's the only thing I have on my Instagram because I stand on that. I stand on that. It only takes one trading model to change your life. Less is more. Less is more. That's the London model. Let's move on. NFP. Now, this is good. Now, I was going to leave this for the NFP series, but it's going to be involved in it as well. So you guys may see this example again. So the New York model here is going to incorporate the NFP news event. And you'll see how the same model that we just talked about on Monday happened here on Friday during NFP. It is crazy. Watch this. I don't think nobody else is showing this. Watch this. This is some madness, bro. 7 a.m., 5 a.m. You guys know the deal already. We got our confluences, premium, discount, right? Cool. We're going to pull up 7 to 10. This is our time to strike, right? To stalk a setup and potentially eat some dinner, man. Trying to eat, trying to make some money. So we set off our swing lows. Let's move it up one more. There we go. So we got our swing low. Sell side. Buy side. And then we got the opening price. Yeah, a lot of people fake themselves out, bro. Overthinking stuff. You're just doing too much. You're watching too many things. You're worried about this, worried about that. Sometimes you can't worry about everything. I want you to know that. You can't add every every single confluence. Like, yeah, we could talk about the bond yields, and we could talk about the DXY, we could talk about gold, we could talk about stocks, we could talk about commodities, we could talk about crypto, but we can't use all of them together in conjunction. It gets messy. Keep it clean. Keep your charts clean too. That's another thing. A lot of people don't got clean charts. I like the chart clean, man. Clean, clean, clean. Let's move forward. 7 a.m. Play it forward. Let's see what happens. Do we run buy side? Do we run sell side? Let's keep playing it. Now we know the news event is at 8:30. Right? It's 8:30, right? Yeah, 8:30. And then I think PMI. PMI happens at London close. But this is the major news event here. This is also a major news event. But mainly everybody's anticipating this. Got the unemployment rate and non-farm payroll. So it's packed. It's packed. So market makers are definitely going to put their foot down hard on this event. Notice how we're not taking a trade yet. A lot of rookies, right? A lot of people unexperienced on this day at least, or any day. Doesn't matter that it's NFP. It's still a protocol. Nothing changes. The only thing that I would change your attitude about NFP. Don't go into thinking that this is the lottery on NFP, because you could get yourself burned. And there are ways you can trade NFP. And I'm telling you, this series is going to open the eyes to many people, and like little things that people just don't think about. Play it forward again. He still didn't run any sell side or buy side, so we're not doing anything. We're waiting. What happened here? Did we run buy side or sell side during the news event? Can somebody tell me? Buy side or sell side? Buy side, exactly. We ran buy side liquidity pool. Are we in a premium or a discount? Premium, exactly. Good answer. Excellent answer, guys. Way to be in tune. Way to be focused. Right? We're in a premium. At this point, many people may say, it's done. We missed it, right? We missed it. NFP is over. We missed a lot of money. Wait. What do we do after this? We go down to the 1 minute. That's the news event. Large. This is 1 minute candle right here. Large. A lot of people went broke on this candle. I already know. A lot of people probably bet short, and they were wrong, and it went long. Ta-da. Whoever went long, kudos to you, Maybe you got lucky on randomness, but we don't like randomness. We want to be objective. What are we looking for? We're still looking for the same idea. We're looking for a fair value gap that runs a swing low. There it is, right here. There goes that swing low. There goes that fair value gap. Right there. Guess what we're going to do? We're going to most likely look to go short here. Right on that line. As soon as price runs right into that fair value gap, we're going short. 1-to-1 scenario. Let's see what happens. Play it forward. Oh, price runs right back into it. I wonder what happens next. Let's play it forward. TP hit. Interesting on NFP. And notice, many times on NFP, you'll get this large move up here. This is liquidity void. The last down close candle is here before this up move. Last up close candle here. So you got this to this. You got this void in price. This entire thing, price fills it back in. But how did we get into trend with that market? We got into trend right at this entry. Why specifically did price, now not every time is it perfect, but why in this area does price turn around? I wonder why. Is it this entry idea? Possibly, because I'm teaching it. Or is it maybe the last up close candle before a drop? Is there a order block theory that's going on here? Possibly as well. But from what my teaching is, it's this. It's right here. I'm looking to sell right there. And there, yes, exactly. Someone said in the chat, there's a shift in structure, right? The momentum has changed. The momentum is no longer bullish anymore. The momentum was bullish for an instant. And then the momentum slowly said, we're not bullish. We're not bullish anymore. We're bearish now. Then you start to see price in lower swing lows, lower swing highs. And it keeps doing it over and over again. You're going to get those false breakouts, right? Price is going to raid a swing high and then go short over and over and over again. Yeah, breaker, right? Order block theory. When I say order block theory, I'm talking about all the order blocks, whether it's a breaker, mitigation, the classic order block that we all know, and any volume imbalance. Yeah, order block theory. Yeah. Good answer. Good answer too. Absolutely. And price goes short. And that's during NFP. Keep playing it all the way through. And look at that. Even more sometimes. Right? We only wanted 15 pips, but this is the unrealized gains. This is why I try to tell people sometimes. You can get more than you expected on certain days. This is Friday. This thing sells off. I don't even know how low it gets. Does it go back to Sunday's opening price? Let's go on a 30-minute real quick to finish it off. No, it finishes there. But that was NFP day. Many people would say, you can't trade NFP. It's impossible. But here I am here showing you live the same models that I use on any other day, using it on NFP. And sometimes it's not even before. It's not even after NFP. It's before NFP sometimes. Sometimes the model will form before NFP too. It could have ran sell side first, gave the entry idea, NFP hit, you got the entry, and it goes long. We've seen that before. We talked about that in I think we talked about that in the previous Forex Fridays, or one of them. But this is just following the model, being consistent, being patient. The inexperienced and rookie trader is going to chase this every time because they think, oh man, I'm missing out on longs. Deontay, you're telling me that I shouldn't be going long? I am telling you, do not chase the price. Leave it. If you were not in this move prior to it happening, don't even try and get in. It's too late. By the time you try to get in long, every time, I'm telling you, by the time you try to get in long, you've missed the boat. And more than likely, your longs are going to go right against you, and it's going to go short. That's NFP for you. Classic rinse and repeat, man. Pull everybody in to the casino, take all their money. They leave broke. They come in like ballers, and they leave broke every time, every Friday, at the first of every month. I know it changes depending on holidays and stuff and when it lands, but that first week, telling you, a lot of people blow. I know a lot of people blow accounts that first week, especially on Friday. Imagine not even getting to Friday. It's a sad reality, you know. But there we go. That's GU. Now we're gonna talk about a pair that I don't trade, but the only reason we're talking about it because I want to be diverse. I don't want people to tell me, "Oh, you're cherry picking. You're only picking certain pairs." We're looking at you, Swissy, right? Swiss franc. I don't trade this thing, but the model still shows itself too. Once again, look at this chart. I know we're on the 15-minute time frame, but look, the high of the week forms on Wednesday, just like the DXY. The low week comes in on Friday. Classic. Take that line away, doesn't make sense. But as soon as you put that line on the chart, it's like, wow, I'm getting a clearer direction on where I should be heading as a trader. Just look at the reactions around the price point. Look at here. Look at our price taps into Sunday's opening price. Quick rejection down. It also raised buy side too. But isn't it odd that it runs to this level and rejects like that? Same thing here on this candle here. It wicks up into it and pulls away from it. Then it goes down below it. Then it runs through it instead. Now, instead of rejecting away from it, it actually runs through that price point and continues trading higher. Once again, here, look at this. Right here. It taps right down into it. And then ever since it taps into Sunday's opening price, look how it turns around for a bit before caving through it once again with speed. Let's take a look at London's model. So let's go back to 2 a.m. Play it forward. Cool. Same thing as always. Stick in the protocol. The model says find the lowest low or clean lows or swing lows or highest highs or swing highs or clean highs within the dead zone. So we found that. This is one. That's the lowest low. At midnight right here, we're taking it. It's also midnight opening price too. So we're taking it. We're taking the swing high. This is a swing high here. That's not broken yet. I'm going into 2 a.m. See that? It didn't break the high yet. For my friends that are a little blind, there it is. It didn't break the high. Swing low. That's another sell side here. And another sell side here. We got the opening price here. Come on, TradingView, work with me. 2 a.m. There we go. Same thing. We're above, or way above, Sunday's opening price, the weekly opening price. We're above 2 a.m.'s opening price. We're above midnight opening price too, which is here. It's not the low here, but it's just above this candle's low. That's the midnight opening price here too. So we have that triple confluence again. Let's play it forward. Let's see what it rates. Comes down, right? Instead of it going up and running buy side, it goes down and runs sell side. Should we want to look for the shorts? I mean, should we look for longs? No. We would prefer for the situation to be it runs buy side first, then it goes short. Instead, it runs sell side first, and we wouldn't look at this as, oh, another long opportunity. No, I would prefer a shorting opportunity. Why? Because we're way above Sunday's opening price, and it's Wednesday. It's a Wednesday. So this is a little bit where the IQ would come into here, right? Come into play, right? The understanding of, okay, it's a Wednesday. Yes, we rated sell side, but we would prefer buy side to be ran first before going short. Let's play it forward. There it is. So price runs right back up quickly, runs right back up to buy side. So now the stage is set. And now we go to the 1 minute time frame. Yeah, and Wednesday, exactly. It didn't show the model for long. Yeah, all the way till Wednesday, pretty much. I only marked off the days where everything was lining up perfectly, right? And this is the only one that's a little skewed because it ran sell side first, then it ran buy side. But we want this happening before we go short. That's the whole point of it. We don't go short when it runs sell side. We rather the best situations when it comes to short, right? The ideal situation, the pinnacle, right? The best, the cream of the crop, sell opportunity is generally happening after running highs. It's a casualty happening, right? We're killing all the orders above the highs. All the buy stop orders are getting killed. That's normally where the best sells come. Same thing, vice versa. We kill all the sell stops and then we buy. You can see here in this idea that we're looking at, it killed all the sell stops here below these lows and then went long. Was it a coincidence that it went long below 2 a.m.? No, it's not coincidence. It's not at all. The market knows what it's doing. But let's keep playing it forward. And we're going to look for that entry idea of a swing low broken. There it is. With a fair value gap. That's the idea there. There it is. We would look to go short here. 15-minute time frame. Down to the 1 minute time frame. We find the entry. We use a 15 pip SL and TP. So a 1-to-1 scenario. You could do 10 for 10 if you want. You could even do 5 for 5 if you really want to, right? It's all up to you. But I prefer the 1-to-1 scenario. I know a lot of people like to go for like, the 2-to-1s, 3-to-1s, or 4-to-1s, but my 1-to-1s end up turning into 4-to-1 sometimes, 5-to-1 sometimes. So that's how I like to gauge it. And we would look to try and go short. And we'll wait and see if we get that entry. There we go. So price taps right into it. Just taps it. Right? This is why ICT said it's very crucial sometimes. You don't know how far price is going to go into that fair value gap. You don't know. We don't know. Yes, we could measure. And there's only three scenarios, right? It's going to hit the discount side of the fair value gap. It's going to hit the mean threshold or the equilibrium of the fair value gap, the midway point of the fair value gap, or it's going to hit the premium side of the fair value gap, the very top or the beginning of it. There's the only three options that it's going to hit. But we're not going to risk that chance and say, oh, it's going to fill the entire fair value gap, then go short. No, we want to get that first tap and then we go short here. And then we go and play it forward. And yes, London has ended, but we can see it still continues out and gives us that TP right there. It's the same idea. Nothing changed. Nothing changed. The only thing that's a little different this day on Wednesday is that it ran sell side first, which is what we really don't want it to see. We would prefer it had ran buy side first, kept that sell side open, and then went short. Here, there's a little more flexibility here in this example, but I'm just showing you different situations and seeing how it unfolds. Still, again, it brings itself back into a triple confluence above 2 a.m., above midnight over here, midnight down here, somewhere right here, and then above weekly open. And we would look to go short. Play it all the way through, see what happens. Let's go in the 15-minute time frame. And that 1-to-1 turns into what? 2-to-1, 3-to-1, 4-to-1. Just like that. On what day? Wednesday. Another ideal trading day. Going right into the news events too. So we didn't wait for let's say you didn't wait for the news events. London would have already got you on page on where the news would have been pushed to. Once again, you're either in the move before the news drops, or you're going to get into the move after the news drops. When the news drops exactly, you're not looking to trade right there and then. It's just you're playing Russian roulette at that point, unless there's certain things in the projected area when news is about to drop that you could potentially say, oh, might tap into this breaker or this mitigation or this fair value gap or volume imbalance or this gap, and then you trade in that direction. But the odds of that happening is very unlikely. Let's go into another day. So we got another London model. So Thursday, another ideal trading day. Ooh, already gave you the answer. And I want you guys to see that. It's quick. That was quick. So that was a selling opportunity. And look, different pair too. This is U Swiss. This is U Swiss franc. So you can't say it doesn't work on other pairs. That's a question I get a lot. It's a very tedious question. I don't mind answering it. But everybody asks is, does it work for this pair? Does it work? Yes. It works for all pairs, dog. Why would it not work for certain pairs? Why would gold, in particularly not work? It's gonna work. It's an FX pair. Trade it. There we go. So we got midnight to 2 a.m. again. 2 a.m. to 5 a.m. Same thing. I'm gonna mark off the lowest low that we have because I can see that it doesn't run any swing lows. Crypto? Good question. Does it work on crypto? That is something I can answer. Crypto, no. I think there is a pattern to it, but crypto is very volatile, man. Whole different sequence, the way it trades sometimes. The fundamentals are there, but I think crypto's a whole nother beast to trade, bruv. Crypto is different. Indices, yeah. Indices, yeah. I see it in indices all the time. And I'm not saying the same kill zones. I'm specialized in FX, but you would have to find a dead zone, figure out that dead zone, and trade around that dead zone. The whole point, the idea that I'm showing you, right? Hopefully this is being understood, and hopefully I'm conceptualizing it in a way that you understand and comprehending. The whole idea is the markets are starting in some type of consolidation form. All markets start in consolidation. I didn't get that at first when I started trading. It was something very subtle that you don't understand at first as a trader. But all markets start in a consolidation. Can you show? I won't show it tonight because, like I said, I'm specialized in FX. But if you have the time later, we could probably take a look at some examples together. Swing low. Sorry, swing high. Swing high here. This is not a swing high, but it's the highest high that we have here. Let me see. Let me double check. Who's higher? You're higher, actually. See? So this is the swing high. So we got a swing high. They're relatively equal, but it's still this high. This candle's higher, and this is the lowest low. We got the opening price at 2 a.m. Here. Oh, that is the wrong thing. Come on, trading view. There we go. So that's 2 a.m. again. 2 a.m.'s opening price. The kill zone's opening price is here. We got midnight opening price. So we're way below midnight and 2 a.m. So we ain't looking for no shorts. And we're so close to the weekly opening price too. So right away, right now, what I'm thinking, I'm not thinking shorts. I'm thinking longs more likely. And as we play it forward, you'll see, okay, we run that sell side. Now we drop below weekly opening price too. Interesting. Let's go to the 1 minute now. So we ran that sell side that we framed at that 215 candle. So 215 here. It should technically be here. I don't know why it's there. It's ran. Sell side is ran. At this point, what are we looking for? That entry idea, and it already is showing itself here too. Look at the entry again. The same sequence. The same sequence. Look at the fair value gap. Look at the swing point inside of it. Look at the market showing you. It's literally showing you its hand right there. Boom. I'm telling you I'm going long. Okay, so what do? We go long too. 15-minute. We wait for that entry. And that's what I said. Sometimes you'll get 2 out of the 3 confirmations. Now, this entry technique is not forming below the weekly opening price, but it is forming below 2 a.m. right here, 2 a.m.'s opening price, and it is forming below midnight over here, opening price. I'll draw it all the way out for you guys. That's midnight. So you got 2 out of the 3 here, like I said earlier in the video. What are you doing, D? There we go. And that should be red. And we wait for price to tap into that. There we go. So now we're looking to go long here at this point. We would go long, and we would well, it wouldn't be right there, of course, but that would be the area. So it would be some type of buy here. We would hold, and then as you can see, not a winner. Not every day is going to be a winner. So we would have took a loss on that day here. So this is a losing idea. See, I gotta show you the losers too. I can't just show you winners. This is a losing idea. You're not gonna win everything, even when everything seems to align. You can still have that risk. That's why we gotta risk properly. We're not gonna win everything, and we played all the way through. And see what happens going into this Thursday. Right before NFP, you're always gonna get that Thursday consolidation. Always. That's a little tip. Right before NFP Thursday night, Thursday afternoon, you're more likely going to get that consolidation really strong. Go 15-minute, play it all the way through. So you got the New York session. It ain't going to do much. And then we got the New York model on NFP. There was a long setup after that drop. Most likely. I don't doubt it. I don't doubt that there was a long setup after that drop, my friend. I guaranteed if we go back and look just real quick. All right, play it forward. Let me see. It would be this fair value gap here. Let's see if it trades into it. It does. Yep. See the same sequence again. It's like not even surprised. Same sequence. Go long in that area, and then it goes long. You get 15 pips, potentially 10 pips, or maybe 20 pips. But you can see again. What is this? A liquidity void. This is a large move down. Let's get rid of this. This is a large move down, all the way down. What is price going to try to do? It's going to try and fill the last up close candle to the last up close candle. It's going to try and fill this range, at least 50% of that range. So we had to cut it here, cut that liquidity void in half. At least 50% of this range is what we would speculate to get tapped into. Let's see if it does. New York session should tap it. Odds are New York does hit it. Or doesn't. No, there it is. See? Eventually it's going to get tapped. And then we should probably see what price maybe sell off from there. That's just a speculation though, right? That's my base assumption. We got a liquidity void, something that large, 50% of it has to at least be filled in. Anywhere from 30 to 50% of that range. Sometimes it's the entire liquidity void. Sometimes it fills the entire thing and then it sells off. I'm not trying to predict that, of course, because that's not my style of trading, but if that is, that's something you could consider and think about. Now let's get into the NFP example. Play it all the way through and stop. We'll frame it again. We're on the 15-minute time frame. What is this line? The heck? Oh, that was the line I put for the 50%. Get everything out the way. Same thing, 5 a.m. to 7, 7 a.m. to 10. These are the ICT kill zones. And I know some people might say, "Oh, but the kill zone started at a different time and it overlaps and it's actually extended." We know, we know that we've been trading for 5+ years now. So we got buy side here, buy side here. We got multiple buy side levels here. I'll mark it off just to be fair. And now we're gonna play it forward. See what happens. Sell side taken. Ooh, right? Sell side taken. Where are we according to the weekly opening price? Are we in a premium or discount? Going into this New York NFP example. Premium or discount? Discount. Thank you guys. Exactly. Thank you for paying attention. We're in a discount. We're also below 7 a.m.'s opening price. Let's mark this off. Just 7 a.m. Now, I'm not sitting here saying, "Oh, we're gonna get the long," right? Because who knows if we're gonna get the long? We have no idea. But let's just follow the model. Let's go down to the 1 minute time frame. Let's look for some type of entry idea. Now, this may happen prior to 8:30 because we've already ran sell side. So let's see. Let's keep going forward. See if we get a fair value gap. And be patient. And it has to be below 7 a.m. And then the news event comes and it drops even more. So we still didn't get the long yet. There's still no long. I'm gonna double check again because I'm only human, but I don't see any fair value gap when after breaking this 15-minute swing low. I do not see a fair value gap that has a swing point inside of it. Not at all. Just double checking because I do make mistakes too. And we'll play it forward. And then we keep going, keep going, keep going. And there it is. Look, perfectly. We landed right on it too. Fair value gap. Ta-da. It looks like magic, bro. I'm telling you. Looks like magic. I know it's hindsight, of course. I went back. Obviously, I wasn't trading GU this week, and I was mainly trading UJ and focused on Asian session. But when you go back and you look for these examples, you're like, wow, I could just apply this to next week. And I could apply it to the following week and the following week and the following week. Doesn't stop. This doesn't stop. We've been doing this for the last we in May now. We've been doing this for 5 months at the beginning of the year. You guys been seeing this over and over again. I've been showing this since last year. 2 years ago, I've been showing this too. It's the same thing. And the word is only going to get out. It's only going to get easier from here. And I think it could be a problem long term because, like, if everybody starts understanding these things, then a lot more profitable traders. You start to change the scope and the scene of how traders trade. Will you be trading GU this month live intraday? Not live. I will be doing a Asian session live with you guys this month. I won't be trading live. Normally, trading live is just too much for me. I like to focus and be by myself. But yeah, long here, 1-to-1 scenario. And then we go long and we hold and we see what happens. TP hit. Right? We're filling in that liquidity void. This is right after NFP. Speed it up. See where we land at the end of the week. And let's go back to the 1 minute time frame. From our entry, look at where we end up at. The highest point we got was here. We basically filled in the liquidity void again. Like we just said again. Look at this. The last up close candle to the last up close candle. Move it out. We fill that entire range back off again. So we fill more than 50% of it. We fill the entire thing. And that's what is expected from price. It's going to rebalance certain areas to a certain degree. Sometimes it's 100%. Sometimes it's only 30%. Sometimes it's only 50% of that range. And then it does what it has to do. And then it consolidates for the rest of the day, pretty much. Might have been some scalping opportunities. I know scalpers may argue, oh, I could have scalped this. I could have done this. Everybody could have, should have, would have, but you ain't do it. So, but we're here just trying to educate people on topics and simple ideas that will get you into the market. There's no fear in losing. 1% per trade. 0.5% per trade. Keep it very minimalistic and move forward from there. Take it day by day, day by day. If you don't see a trade set up today, it's okay. It's not the end of the world. People want to trade 5 days out of the week. You're not going to have a successful career if you're trading every single day of the week, including Sunday. So let's say Sunday is like a half day, so 5.5 days. You can't be trading all 5 days. I know there's money to be made. The potential reward is infinite. It's infinite reward. But does it mean you're going to put yourself in a position to win that infinite award? Not all the time. We're only trying to take a small piece out of the cake. Small piece. And we're going to move on to our next topic. I'm going to check the chat to see if I missed any questions. If there is any questions, any confusion on what we just talked about, please DM me and we could go through a one-on-one session together and I'll walk you through it so we can comprehend it together. I have done that with a few folks and they told me it helped them tremendously. So if you're still confused, please hit me up. I got you, man. You don't got to pay me a dime. This is me giving back. So we did the NFP weekly range review. The next topic, we're going to talk about the April's Asian session model results. Great results this month. So if you did the model, you should be up this month. I'm not saying you got to truly believe in it, but if you put it in a demo account and you tested it and you traded, and let's say you traded every single day, Monday to Thursday, every single Asia session, you would have came up in a positive return. And we'll check it out right now. You have a question on IPTA. Save it for the end. IPTA, we'll get to IPTA. When we start getting into, when we talk about GU for the May speculations, ask your IPTA question because IPTA is going to be on the chart. So let's jump right into the Asian session. Yeah, the model, bro, we're about to get into this right now. The model is like literally anywhere from 70% to like 85% accurate. It is insane. Shout out to somebody who said that in the chat. The statistics, if you really backtest it and yourself, you know that this model really like it's a hitter, bro. It's literally a hitter. It's gold. It's gold. So if you don't have access to this documentation, so nobody can edit this. Nobody, only I can edit it. I know it's shared. Like it's like 26 people have access to this right now. I'm surprised it only says 26. It's a lot of people. I know there's more. I could have sworn there was more people that had access to this. But if you don't have access to this, let me know. I'll share it to you. You're only able to view it. You can't edit it. I made a mistake and I allowed someone to edit it and they changed all the data. Like they changed it from UJ to GJ and it was so crazy. Luckily, I was able to go back and get that data and I make copies of my data. Got to be counterintuitive. Okay, so April, here we go. April. Right? April results. We came out positive, 177. Not a lot. That's not major. But that's including every day. Like I'm telling you, that's including every day. If you would have took a trade Monday to Thursday, every available Asian session that we had, you would have ended up with this 177. So you can still come up net positive, which is great. You don't come up net negative. I don't think there's besides December, last December, terrible. I don't recommend anybody trading Asian model for December because last year when I did it in December and I was tracking it, losers back to 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 back. And I think the max losing streak was like a week. Like when I mean a week, like 7 days back to back losers, no break in between. So it will happen. And every trader has gone through that before. But when we start to focus in on the unrealized gains as well, I only track UJ. Yeah, only UJ. So a lot of people ask me about AJ, GJ, and all those other things. And I'm like, I don't focus on all those things. I try to keep it as simple for me, my man, because my life is busy, you know? So simple is what I want to do. One pair, and that's it. I've been rocking with UJ for at least a year now. So unrealized gains, we can see we get 1,000 pips, 1,027 pips. That's the unrealized gains. But when we start to look into it, shout out to AU. AU is a good pair to trade too. You're ride or die. That's what's up. If we look at the unrealized gains, look at which days really stand out again. And I have it already highlighted on the day of week. I got my Tuesdays marked off in red and my Thursdays marked off in green. This day right here, it's a Thursday. We checked off 10 pips, 15 pips, and that's what we were showing all throughout all the models. 15 pips is the standard. Very That's the average of what I really want to get. 15 pips, cool. 10 pips is where you would scale out. Just take partials, maybe move your stop loss to break even, scale, trail it underneath a swing low, and try to see if you get more. If not, you get stopped out. It's not the end of the world. Move on, next trade. Oftentimes, it's better, and you'll see why. It's better to leave your stop loss at its original um, level, because you'd be able to catch something like this, 852 pips. Now, thinking about this, if you have a high trading IQ, you know that this trade basically trended for multiple weeks at a time, pretty much the entire month. This one trade. What percent? I would take off anywhere from 60 to like 85% off the trade, and then hold the rest. Anywhere from 60 to 80. Normally I do 80%. I'd say 80% off the trade, hold the rest and see what happens. Everything else is extra. I was being very realistic. The max, I left the max 40 pips. So if it ran more than 40 pips, that's how I got this realistic number here. So I just translated all these numbers, these two columns. It's literally the same numbers. The only difference is the unrealized gains. These are literally the same numbers. This is just the calculation column, and this is the calculation column. But the max, I was being very fair about it, right? The max calculation would be 40, 40. Instead of me putting 82 in this column, I wanted to keep it fair and make it realistic. 40 pips is a realistic. Traders be catching 40 pips a day, so I kept it at 40 pips. Zero, right? What does zero mean? No entry. No entry. So that Thursday, right here, there's literally no entry. No matter what it is, I don't know how it formed out. I can't remember and go back and tell you, but there was no entry on that day for whatever particular reason. You got 0 pips, so no gain and no loss, which is okay. We live to fight another day. And the same thing happens on that Monday. Then we go back to Tuesday. 2 no entries, but then Tuesday comes in with a banger. Tuesday. Let's take a look at Tuesday. So this April the 9th. April the 9th. Let's take a look at that. Let's go to this chart. I'll get there real quick for you guys. I'll share the screen in just a second. I have a bad habit of not sharing my screens right away. This night right here. So April the 9th. Share this tab instead. I do, right? I know, man. I got to get better. This is the little things. I'm slowly getting better. Once you're aware of it, and you make the adjustment, that's the first step. Once you're aware of your problems, that's the first step. Now you can start doing something about it. So Asian session. Let's run it through. I know it sounds like the same thing over and over again. You're like, damn, Deontay, is it really that simple? It is. It really is. It's just that everybody's very greedy. Everybody wants more than they can actually chew. Take your time. There we go. Midnight opening price. We got 12 p.m. to 8 p.m. This gray shaded zone again is another dead zone. Let's make this official for you guys, right? This is how I do my Asian session library, right? So it'd be, I would write this out. New York lunch, right? No trading allowed. If I could spell. And then time period 12 p.m. to 8 p.m. New York Eastern Standard Time. Cool. Then we go over here. We got the Asian kill zone. Trading is allowed. Right? Trading allowed. And then we got 8 p.m. to 12 a.m. New York Eastern Standard Time. 100%. Yo, shut up. Yo, someone in the chat said, it should get boring with time. It should, because it should be that easy. Bro, when these people make money, bro, it's rinse and repeat. These people don't get excited, right? Like, they might get happy, a little, euphoria, they get a little happiness because they made a bag or whatever. But when you're making money and you're consistent, you ain't getting happy. You just know, hey, this is protocol. This is standard procedure. We know what we're doing here. We ain't come to play. We're trying to make money. We're trying to pay bills. Trading is allowed. This is the dead zone. Same thing. 15-minute swing low. We don't change nothing. We don't break nothing. Now, the only difference I would tell you here, I do not use confluences here, and we could, but I don't use confluences like Sunday's opening price, midnight opening price. The only confluence I use here the only thing that I use here in natural price action is the Asian open kill zone. That's it. The opening price for Asian session is the only thing I use. Now we could look into the other confluences between Sunday's opening price, the midnight opening price, and stuff like that. We could, but I found that if I just leave it as simple as possible with just looking at the kill zone's opening price and that's it, it tends to be better that way for me. So here we go. What I'm showing you with the weekly range review, you're looking for a one shot, one kill. That's what I'm showing you. Same thing can happen during the Asian session too. This is a one shot, one kill kind of idea that we're looking to hunt for. So let's play it forward. This is the opening price. This is the day that gives us 800 and something pips and unrealized gains. Make sure all our swing points are marked off. I want to make sure it's up to par for you guys. We got the Asian Open. We'll just put APM. Play it forward. What happens? Quick run to the downside. Notice we don't get the run to the buy side up here. We don't get the run to the buy side. And this happens after 8 p.m. Runs down. What do you think? Now I'm asking a question to the chat. What do you think retail traders are doing when they see this? Are they buying or are they selling? Chasing, 100%. They're looking to sell. And I don't want to sell. I want to be opposite to what the average trader is thinking. I think completely out the box. There's certain categories to how traders trade. A lot of traders are going to look at this and think, break, retest, go short. It could be a scenario, and the market could give that trader that idea and give them that opportunity to find that short. That would mean I would be a loser for the day, and I could live with that because everybody does get it wrong at times. I get it wrong too, and you're supposed to because nobody has 100% win rate. It'd be crazy. Price comes down. We're going to look to go counter. We want the retail traders to go short. I want them to sell it to me. Sell it to me, right? Sell your product and service to me so that I could buy it and flip it for higher. That's what's happening here. I'm just buying it at a cheaper price because I know it's going to go up in value in the next couple of hours or the next couple of minutes, essentially. So let's go down to the 1 minute. Following protocol. Now we're below the opening price of the kill zone, 8 p.m. We're in a deep discount now. We're below it. And we rated sell side. Now, it doesn't matter how many levels of sell side we rated. I don't take that into account. It could be a characteristic, but it's not something I think is specific enough for me to really think that it's something significant. Once it runs a sell side liquidity pool, it's ran a sell side liquidity pool. It's done. I don't need it to close below it. I just need it to cross the plane of line. Like for those that know American football, and not soccer ball, right? Not football with your actual feet, but American football that they throw around with their hands. Once that football crosses the plane of line, it's a touchdown. It's done. It's broken. It's end. He got in the end zone. It's over. It's the same thing with these lows too. I don't care if there's a candle that doesn't close below it. Once it runs it, it's a raid. It's over. They've been liquidated below that low. We're looking for the entry idea, fair value gap. Oh, there it is. There it is, right there. This is what? Tuesday, the 9th. There goes the fair value gap here. Now, if my calculations, if I've been on my P's and Q's about my data, we should have this price point here. We should have this price point 151,706 as our tracking. I should say that on our tracking thing. 151,706. And it does, see? Should have tab instead. There it is. Entry right there. 151,706. Stop loss. 151,556. So we ain't making up these numbers here. I ain't lying to nobody, bro. There ain't no need for me to lie to you and try to convince you. But I need to be aware of this, so I'm on top of my game. So we got that stop loss right there, and we got our TP up there. Play it forward. Right, we're waiting. There it is, taps. And price runs right into it. Look at that. Nice reaction, and we go long. And I remember this night too. A lot of people were asking, are we long? I'm like, yo, open your eyes. We're long for sure. It's live, man. And played up. I'm showing my spreadsheet. Thank you. Oh, there goes the habit again. There goes the entry. Here. Taps right into it. Man, people was like, oh, did we go long? Yes, we did. We went long. You don't have to ask me. A lot of people like to ask me, are you long? Are you long, Deontay? What do you think? It's Tuesday. It's a Tuesday night. It's my favorite kill zone. It ran south side. It's below the Asian session open. I'm long. Absolutely. And we take that. And we take that long. And we hold. We go back into Asian open. Right? And we hold. No matter what, we hold. We get to 10 pips. Let's see. Did we get 10 pips? No, we did not get 10 pips. I don't think that is. That's like 8 and change. 7.8. 7.8 pips before that drop down. And we wait patiently. We hold. Right? We don't get shaken out of the market. We believe in the model. You stand by your model and you hold. And that's the end of the Asian session there. And you see, look, it keeps trading. A question I get often is, do you continue to hold the trade even if you're in drawdown or profit and you haven't hit your final TP or your stop loss? Yes, because I believe that there is still a possibility the trade can come back into hope and give us that profit that we're looking for. Get rid of this, and let's play it forward. Let's go on the hourly from where we are. So we know we're at long, right down there. We'll put a line down here so you can see where the stop loss is. So we're very clear on what the stop loss is. This is where the stop loss level is. Right there. Play it forward. That's on a Tuesday. This one entry idea is on a Tuesday. It's crazy when you see this stuff, bro. It's crazy. And just watch it go. It ain't done yet either. I think it's gonna top out right about now. Oh, I lied. It went a little higher. There it is. There goes the top out right there. And that was one entry. That was one entry that gets us all the way up here. That was weeks on end. This is basically the low. We caught pretty much almost the low of the month. Share this. Can you guys see my screen? Hope I'm not tweaking. Okay, cool. Thank you, man. Price continues flying up higher. And it goes all the way up higher and higher and higher and higher. This one idea happens on a Tuesday, which is why I'm trying to tell you guys that this data tracking allows you to understand the markets just a little bit better. You got edge because you have anecdotal data in your pocket now. Nobody should be saying, okay, Monday, we definitely going to win. No, you don't ever see me going in the chat telling people, yo, tonight's litty. No. Tuesday night, oh, I'm having a field day. I'm in the chat talking to you guys. Yo, what's going on? How y'all doing? Yo, it's Tuesday night. Who's ready to trade tonight? Wednesday night, iffy sometimes. Wednesday night sometimes gives some bangers. Not gonna lie, Wednesday does. But if I had to pick 2 certain days, even if I had to pick 3, if I had to pick 3, it's always gonna be Tuesday, Wednesday, Thursday. Also, was the higher time frame indicating a push up higher? Also, of course it was. It's got to be. It's got to be. If you go on the daily chart, guarantee you, let's just go like right here and then go daily. Guarantee you, momentum was showing higher swing high, higher swing low. Look at that. Look at the higher swing low. Look at that. So we went into April. What's the start of April? April's here. The opening price of the month is here. So it drops below. False break. False break. Come on, D. Get better. Sorry. False break here. False break on April. Go back to April here. This is the beginning of the month. What do we like to classify? Now I'm starting getting into trend. This is how I teach. This is how I teach myself trend or teach others that are new to understanding momentum in the marketplace. Price at the beginning of April breaks what? A swing low. So after breaking that swing low, we should get what? A lower swing high. Instead, we don't get a lower swing high. Instead, we see price comes up and breaks a swing high. So this is a false break. We can see they also position themselves below the opening price of the month. Look at that. We knew the month was already bullish. We've established that. Yen crosses were going to fly. Yen crosses are going to go higher. We knew that the yen crosses was going to go higher. Dollar flipped back bullish. It was bearish at what said point and then flip back bullish. I mean, bearish at said point and then flip back bullish really quick on us. Swing high broken. Look at the higher swing low. 1, 2, 3. That's all it took. 1, 2, 3. And it continues to push just a little bit higher. Just a little bit higher. And then it finally tops over. And then we had that intervention right at 160, right? The BOJ. I don't know if you guys, this is why it's important to stay up to date with like news and other countries' financial situations. The yen is terrible right now, and they're trying their best right now to save their country's currency. And it looks like they might have been doing a good job so far. They intervened at 160. I knew 160 was a major key level, and that's when I showed you guys I went short, and that thing tanked. You got an up day, counter day up, and then it goes down. Just looking at this up, and everything starts to blend together. I hate when this happens, but you see this up leg that goes up. Look at every down day. I'm gonna clear this off. Look at every down day. It was a new buying opportunity, literally, for the market to continue trending higher. But only the buyers would have seen it from that point of view. If you were a seller, you would have not seen these down days as counter trends. You probably saw this as hope or opportunity that, oh, the market is going to flip. It's going to flip bearish. Nope. It only went back higher again. Every down day was a potential long opportunity. It's really something remarkable to see. And it's very simple. You don't need an indicator to see it. You just need somebody to inform you about it, you know? So be open-minded to certain methodologies and ideologies. I know it's not very indicator flashy and exciting, but it is what it is, man. This is how I trade. And I think it's it's really receptive to other people in the way I teach it. So, and I think you guys can agree that you guys comprehend the markets just a tad bit better. Maybe not significantly better, but just a little bit better. That's all I'm trying to do. Just improve the way you read price in its natural form. And that was Tuesday. And I think there was one more. Was there any other day? Share this tab instead. There was one more day that did the same thing. Tuesday here. It's the beginning of the month here, but it got stopped out. Well, how do we know it got stopped out? Because clearly it didn't keep running for 852 pips. So this was the max reward before it got stopped out. The very max. And sometimes I don't write off the full max because this trade idea could still be running into the next month, the following month potentially. But I like to keep the cutoff at the end of the month. What is the highest this trade has gone to? And the highest this trade went to before the end of the month was 852 pips. Insane. So this is why I try to tell you guys, sometimes you may not want to move the stop loss on those days that you know it can continue trending higher. Yes, you may have to pay the fees for holding overnight and whatever the case may be, and it will add up, of course, but if it's a swing trade, it's well worth it because you're compounding a lot more than other traders because every day they have to go in and find an opportunity. But you already found an anchor point. You found the anchor right here on that Tuesday, and it trended up for the rest of the month. It's unbelievable. But I'm showing it here live, you know? Hopefully, there's other people in the community also speaking about stuff like this as well. But if not, I'll be the first. And we'll continue to push this information out until other people start to view it this way and start to understand it. And sooner or later, we'll have a huge population of people saying Asian session is where it's at. That's really one of my biggest goals. I want to change the narrative. When I first started trading, said the Asian session is a waste of time. It's a waste of time. It's only consolidation. It is consolidation. That's not wrong. But we could find a trade in that consolidation. If we know the Asian session is going to make a high and a low, we know we could take something out of that consolidation. And the only reason why we're trading the yen crosses is because it's much more volatile during the Asian kill zone. That's why you don't see me talking about the majors like EU, GU, NU, AU during Asian session because it's not as dynamic. It's not going to move as much. But because we have that last pair at the end, yen, that's the only reason why we're looking to use it. Now, does the model perform in the majors as well, like UCAD, USWISSY, AU, GU, NU, all the others that we know? Yes, it does. Does it have a same pattern as well on Tuesdays and Thursdays? Probably. I wouldn't be surprised if it doesn't. But if you are someone that wants to trade those pairs, do your due diligence, do the groundwork. You see what I've been doing from the beginning of the year. January 2024, beginning of the year, February, March, April, and now we're in May. And obviously I have to update it too. But last night was successful. Last night was successful. So hopefully this was insightful. And once again, Asian session model still coming up on top. The last month wasn't as great. So March, interesting results, you know? April, much better. Great improvement, but nothing like January. January was a beast on its own. You can see there's a lot of checks on this chart here. And it's a lot less here. And there's a lot less here. And then there's a bit more here. But even if there's no checks too, sometimes there's no loss. It's just 0, 0, 0, 0, 0. And I prefer to have no loss or no trade than to actually take risk. I prefer that. I don't mind that at all. So hopefully you found that insightful. We'll move on to the next topic. And the next topic is going to be GU speculations. And we'll talk about how I filter out and why I picked GU for this month. So this is GU. This is what we have so far going into the month. Now I know I'm behind schedule with the videos and stuff like that. Apologize. Life happens. I'm not just a trader full time. I do other things outside of trading because I do know trading is not going to be the thing that gives me generational wealth. You know, I can't pass this on to my kids. I could teach them, but who's to say they're going to be receptive to the information and actually want to do it? Who knows? But we'll see. Hopefully they will. GU. As always, we like to use IPTA. Now, if you have a question, someone had a question about IPTA, please ask that question. Please ask that question about IPTA so we can get in tune with that. So, some macro information. So, we got the Bank of England. They have a rate of 5.25. The Feds, right? Federal Reserve, Central Bank in America, has a rate of 5.5. So, there's a rate difference, an interest rate differential of 0.25%. Now, it's just a difference. It's not a major difference, but it's a difference. But compared to the other pairs that we had, it was better than the other options I had. So, for example, let's get that website going for you guys. We got central banks. Share this tab instead. So you should be looking at a screen that shows the latest interest rates on all the world's central banks. And we can see that Australian, oh, just restarted. Dang, did the internet go out again? Jeez, man. This internet sucks, fam. So good. Luckily, it's recording everything. I'm gonna have to edit this. More work for me. Apologize, guys. Here we got the Feds bank, the Feds, and we have Australia. Now we would have did AU again, but I didn't want to do AU because we like to change that month to month. I want to show the community that you don't have to stick with the same pair all month or the entire year. You can change it up month to month. And it's better to spice it up a little bit. You know, it's a little boring, so let's change the pairs a little bit. AU we did last month. GU, we went with GU. Why? Because GU out of the rest of the pairs, besides the one we did last month, was well suited because we did EU already. So eventually I'm gonna have to do these pairs again because I'm gonna run out of pairs. But we didn't go with EU. EU would have been a good choice too. But we didn't go with NU for sure because why? It's equal rates. It's 5.5 and 5.5. That's not to say NU wouldn't give good price action and good movement, but I'm just not going to take that chance because the rates are so strong. They're evenly matched. They're going to butt heads. Price may just consolidate or price may be range bound. So I would just opt out of trading NU. But I would definitely trade GU because there's some difference between the rate. That's all I'm really looking for, just a difference. And that's it. Now, after that, I was looking at the monthly chart and looking to see which pair had a smaller range cycle last month. So GU was decent, not bad. It was coming from a March that was very small, and April was relatively small from the last 3 to 5 months. These are still small months compared to November and September. It's still a small range. We still haven't had very large monthly movement so far in the year, and we will start to get it because we know the markets go from small to large eventually. AU here was also small too, which was nice to see. And you can see already it's going up. It's going up and away from a down candle going into the new month already. EU, same thing, down, small in nature compared to the last 3 to 5 months, and it's already going up. But we did those pairs already, so it's no need. So that's why GU won by default. So I had to go with GU to switch it up for you guys, give you guys something new to look for the month. Now, when we come down to the daily chart, IPTA look back data range. I hope you choose AU because we did AU before. Or AU again? Probably not. We're probably gonna do something else. Probably gonna jump into. I probably last chance. I probably do gold and then NU. I mark off 20, 40, 60. I don't drop down 1 hour. AMD accumulation, manipulation, distribution. So here I'm on the daily chart. This is what I like to do. I go back 20 bars, 20 days. Now I know it says 28 days. Now someone can probably educate me on this because I'm not sure why it says 28 days, unless it's including like the weekends or the Sundays or whatever. I'm not sure, but it's 20 bars. Because if I count literally 20 bars, that's 20 days because that's the daily chart. So that's what I'm going with. See, I figured it's including the weekends. So that's everybody kept saying, oh, that's not days. It is days though. It's 20 bars because we're on a daily chart. Each candle represents 1 day, so it has to be 20 days. And I do the same thing over and over again. 20, 40, 60, just as ICT taught in the video. I don't like to switch up his words. Then I like to cast forward 20 days. And move this back 1 bar. There we go. So why do we cast forward 20 days? We cast forward 20 days because hypothetically speaking, every 20 days, the market is going to move to a new liquidity pool, whether that's buy side or sell side, or within that 20-day period, it's going to consolidate. It's going to be bouncing back and forth, back and forth, back and forth. Even within that consolidation, it will be rating buy side and sell side, whether that's on the higher time frame or the lower time frame. It's inevitable. But every 20 days, we're looking for some type of quarterly shift going into that new month. So going into that new month, I'm anticipating the data behind this price point. Let's bring it back here. All the data behind this price point here is going to be used by the algorithm. Who's calling me? My little brother. Is he outside? He is. Give me 1 second, folks, and let him in. All right, I'm back. So I'm anticipating that the algorithm is going to use this data. It has to be using data prior because what is it working off of? It has to be working off of levels that's already existed in price. Unless it's like at all-time highs, then at this point, some of this stuff would be unrealistic. But since it's not at all-time highs or all-time lows, we can still have data to project and use to give us an edge in the market. So we take the 20-day high, we take the 20-day low. So we have a range here. We take the 40-day high and we go to the 20-day low. We have another range here, right? We have multiple ranges. So from high to low, we could break that in half. Premium discount. Same thing here. High to low, premium discount. Even the levels that are already broken going into the new month, it can still be significant to price. Do not be fooled and think that, oh, because this level has been broken, price may not give a reaction around it. It definitely can, and it will not forget it. If we had to mark off the range, it would look like this. Cut that range in half. Or if you were to mark it off like this, from 40 to 20, looks like that. We're in a discount still. So GU hypothetically, not even hypothetically, objectively is cheap from this range high, from this range low. And it's trying to get back to what? Equilibrium. If you play it forward, let's see what happens. So price is trading around that IPTA low, 40-day low, and 60-day low. It's just stuck there in a small range, tapped into it, rejected, play it forward again, and this is where we are right now. It's still sitting around this level. It's significant still. Price runs up into this inefficiency here. Now, before I get ahead of myself, the seasonal tendency right now for British pound is supposed to be, what is it? We're going to May, bearish. Let me share this tab. There we go. Bearish. And for dollar, it's supposed to be bullish. So I like that the seasonal tendencies is also giving the code confirmation of price moving in opposite directions, because we know market symmetry. If dollar goes up, all the euro dollars, when I say euro dollars, I'm referring to British pound, EU, AU, NU, and everything else that's against the dollar should most likely be moving opposite. And the fact that the seasonal tendencies are showing that makes me want to trade this pair more than others. That's the whole reason why we try to filter out and select pairs that are more primed to move going into a new month. Because if GU was showing signs of going up with dollar, I would definitely not trade GU. GU would not have made it onto the list for me to trade. If dollar and GU were both going down, it would not make it on the list. They need to be showing on the seasonal charts them going in opposite directions. Now, when you have that in mind, you're able to map out, is equity clock free still? Yes, it is still free. I know. So they had moved. Like I'll show you. Look, if you go home here, everybody thinks like you can't search anything because they don't have that search tab here anymore, and everybody thinks you got to log in. You don't got to log in. Just click Forex and then type what you're looking for, and then it should come up just like that. Don't be fooled. I don't know if it's like a business tactic or a strategy, but it is what it is. There's always going to be free resources to get the seasonal tendency, whether it's not this chart, I mean this website or another website. But I need to pick pairs that are moving in code seasonally. Now, when you start to see that, you can map out the entire year at this point. You could map out from January to December which month are more likely going to give you proper price action and correlation. You easily start to weed out what months you want to avoid for certain pairs. If it's not aligning, why trade it? If the data is showing you that it's not aligning and moving in market symmetry, why would you go into that month trading that pair? You're doing yourself a disservice. You can already put yourself in that advantage when you place yourself in environments where the market is going to work in your favor, not against you. And that's what we're doing. Let's go back to GU. So GU seasonally should be bearish. And if we're taking that stance that it's going to be bearish, how do we frame certain scenarios to this? And you guys are going to hear this again because I have to make a daily update for GU for those that are not viewing this. But I would assume, right, this is how I like to do it. It's always about visualization first. A lot of the best people in the world, like people that thinking people, bro. My dad said, always be a thinking man. Be a thinking man. Always think. Think for yourself. Don't let other people think for you. If I'm going to go short, and if this is going to come to fruition, bearish pound dollar, I need certain things to happen. One thing I need to happen is number one, a swing high forms above the open. This is one characteristic to a bearish month. Look at any bearish month, you cannot say this is not one characteristic. This is absolutely one characteristic. Second characteristic, I need to see price move above the opening price and give speed down. So I need some type of fair value gap or inefficiency to the downside. So there's going to be some type of SIBI. SIBI forms during this month. At least one. And normally it's a major one too. Need a SIBI. And the third thing is I want to see what other pairs are doing. So anything that, right, other assets or pairs. What are they doing? Are they also moving in code with this and the idea? So if GU is making a high above the monthly opening price, then DXY is making a low below the opening price. I need to see that relationship. So these are very basic things I like to look for a bearish month. Now there's a few others. We're trying to keep it short. I need to see something along the lines like this. Let's say price runs this swing high. Doesn't have to be the IP to 20-day high for this to start going short. It could just be this high. And then we go short. And price continues to go lower. And it's going to form some type of top above the opening price. And that's where the commercials are probably getting into their best net shorts positions if they want price to go lower. So it's going to go up and then go short. It may not stop here and then go short. It may want to continue going high. It may run the 20-day high. It may run into that old 60-day high here. And then it gives signs that it wants to break down and go lower for the rest of the month. But we need to play it day by day. Going into it, what would I say right now currently? I would say right now, this is either bullish momentum or a false break. There's only two ways I'm going to classify this break on this swing high here. This swing high formation with that red line above it. This is either a false break, or is this bearish momentum? Bullish momentum. Or bullish, let's just say bullish trend. That's the only way I like to classify it. Because price can break this high and then produce what? A higher swing low. Higher than this one here. This is where the commercials are buying again because it's going down. It's some type of retracement. You're going to get probably a couple, maybe one or two down days. And after those 2 down days, price is going to start to look to get up and out of there, get away from the down candles. But if it's a false break, I want it to do what? Run the swing low that we have in recent time. I want to see price go up, take out the swing low. Now we do the same thing again. The same thing flips again. Is this a false break or is this a bearish trend? If it's a bearish trend, it's more than likely going to do what? Go up and go down. I know there's a fair value gap there. Appreciate you, dog. We said that earlier. I was like, let me not get ahead of myself. Yeah, there's a fair value gap here that it traded up into. So are we going to see price come down and then make a lower swing low and trade lower? Possibly. Yes, we just filled in some type of PD array. We got this SIBI here, price traded up into. So we want to see if price is going to respect this and go lower. How do we look to go short? Well, we would either wait for confirmation for it to break the swing low and then go short then. That's a very aggressive trader. Now, if you're someone that's really, less tolerant to risk, and you don't want to risk so much, you want to wait for that lower swing high to form. It's going to be a lower swing high, lower than this one here. After that, you're going to then look for any up candles and go short after those up candles, especially if the up candles are small in nature, like this. Small, large, right? That's a big, large move down. I'm not saying you would have figured out to go short, but I'm just cherry picking here just to give the example. Again, small candle, and it's up too. It's an up and small candle. Look at how it drops down away from it. I'm telling you, these moments in times catches a lot of traders off guard, bro. It catches them off guard. They have no idea what price is doing. You'll see in Reddit forums, trading view forums, what am I doing wrong? I don't understand what price is doing. You are just chasing price because you see two up candles, oh, you think, oh, it's bullish. You see two down candles, oh, it's bearish. No, you got to arrive to a conclusion. What is your narrative? Is the market trending or is the market consolidating? Are we breaking highs or are we breaking lows? That's what we like to do over and over again. Just keep classifying the swings. The market is all swing points. Swing high, swing low. There goes another range. If we were to, I'm not trying to get technical here, but if we had to measure this, I guarantee you it's probably landing in some type of auto trade entry, right? Here. Now, I'm not saying that it's going to have, this is the perfect scenario, go short, and now it's going to go short. It could, and it could line up that way. It's expensive. It's above 50%. It's above May's opening price. They could be baking in the shorts right now. Right now, they're baking in the shorts. Short, short, short. Commercials are going heavy short. But retail traders are doing what? Heavy long, heavy long, heavy long, heavy long, heavy long. And in a few weeks, we'll see who's the winner. And that's it. Remember, the commercials never lose. The commercials never lose because it's their game. The large commercial speculators, they lose. Some large funds lose. Some large banks lose. But it's okay. They'll write it off, tax write off, whatever they do to get around it. They'll make it up. They'll get funding again. They get sponsorship. All the millionaire buddies, they'll come together and make another hedge fund, and and everything moves forward. And then you got the small speculators. That's us, small fries. We're getting cooked. We ain't got the equity. We ain't got unlimited capital like other people. We don't got unlimited sponsorships, right? People are not just gonna come around and just give you $1 million to go trade with. It doesn't work like that for the common people. Can we look at the COT data to limit that? Great question. Now, COT data is something that I don't utilize in my methodology. It is something I used to, but I don't really look into it because I just personally I think it can be misconceiving. And the reason I say that is because even when you see the commercials are net long, the price action can be going short. So it's like, what's going on there? Or vice versa. The commercials might be heavily net short and the market keeps going up. So you're like, what's going on? I thought the data would prove to us that if the commercials have a larger amount of orders of buyers versus sellers, then the buyer should win and price should go up. Or a large amount of sellers than buyers, then price should go down. But there are many times where price does not go down, even though they have a huge net short position. Price does not go up, even though they have a huge net long position. So it could be very misconceiving because they're hedging. And that's something I am still learning. Now I'm gonna sit here and try and educate you on something I don't know because if I don't know it, I ain't gonna teach it. You got to be honest with yourself. That, my friend, is something you have to do more due diligence on, and that's something that I personally don't even bother with. But I would say that if you do look at the numbers week after week and you try to add the numbers and see, okay, the longs keep increasing and the price action is going up, maybe there is a response there. There's a correlation there. Okay, the shorts are increasing, right? And the price action is going down, and prices trading into PD arrays, premium PD arrays, like bearish order blocks, volume imbalances, breakers, mitigation blocks, all bearish side, of course, right? Premium PD arrays, and prices showing respects to that PD array and going lower. Maybe the COT data is feasible there in that moment in time. So, my friend, I would tell you do a little more due diligence. I know there's a channel. I would have to get it to you, but there's a channel, a guy that does COT data breakdown a little further than ICT because ICT shows like the hedge program and stuff like that. That I still can't even gauge, right? And I try to tell people, even though even if you went through paid mentorship, bro, it don't mean nothing because that doesn't mean you're profitable. Even ICT said that himself. Even if you make it the charter, and like I said, dude is selling a course. I don't hate him for that, make your money how you can. And it's information that was valuable anyway, so well deserved. But it's a marketing thing. People got to find a way to monetize their content and try to make money. Life is expensive, and monetization is a great way to pay the bills. But even if you were charter, doesn't mean you're a proficient trader, right? You made it through all 12 months of mentorship, and now you finally pay your last fee, right? You had to pay a fee at the end, right? You pay ICT every 12 month, every month there was a fee, and then the last month you had charter your charter fee. You pay that charter fee, I think it was like $250 or whatever, and then you get accepted into the charter program. And that's nothing. Like people thought it was like something super special. It's nothing that special. Um, but yeah, not everything from the mentorship really clicked for me. IPTA clicked for me. Um, Everything else like ranges and time of day, kill zones, those things started clicking. But then I needed to be more specific and niche and find a model that really worked. So this was, I think, this is a part of market maker model. If I can't remember, it's been a while. Market maker model 4 and 5 is where I start to incorporate IPTA, and that's it. That's pretty much it. Um, what about the intermarket analysis? Yes, absolutely. Intermarket analysis. You need to be looking at other pairs, right? So you got to be looking at AU. You got to be looking at EU. You got to be looking at NU. So I'm not sure if you're familiar with this, my friend that asked that question, but if you watch the daily updates, you'll see in moments of times I do go over to the other pairs. I'm like, okay, what is AU doing? What is EU doing? What is gold doing? What is UCAD doing? What is inversely correlated pairs doing? So even though we're focused on GU, doesn't mean that we're locked in and only looking at it. We do want to see other signs from other pairs moving in the same correlation, like EU, NU, GU. We want to see if they're going to do the same thing. Or are they doing something opposite? Are we getting an SMT diversion? Are we getting market makers stepping in and putting their actual hand on the market and manipulating price and holding it from breaking a low or holding it from breaking a high before it shoots off and then goes in the opposite direction? So that's the intermarket analysis. And you'll see as we go through day by day, like if you watch the daily updates, you'll see I don't just stick on the pair of the month. You'll see I move over and show other pairs. I may not give the whole IPTA breakdown because I want it to be short and concise. You wanted to talk about I didn't want to talk about SMT. Do you want me to talk about SMT? Because I hardly even touch on SMT as often as I should. So if one pair is making a high, or let's say for example, G is making a high, but we don't see EU and let's say EU making a high, then there might be something up, unless it's just late to the party. And if we go for like a week or two and it's still a couple of days into the week and it's still haven't broken that high, we know the market makers are holding that pair in a range for a news event or a particular time of day, and then they let go of price and then they let it fly. But in that moment of them stalling and holding price, they're accumulating a lot of orders. A lot of orders are building in, right? The market is generating buy and sell orders, buy and sell, just flying in, right? High frequency trading. The orders are just filling in, filling in, filling in, filling in. And it's not our orders, it's their orders. And eventually one side wins and the market flies. And then everything goes back into sync because the market is not going to be SMT stands for smart money tools. It's not like a fancy terminology. The market, it's not always going to be in a diversion all the time. They have to go back eventually into market symmetry, unless the market is completely broken. And the markets have been broken for a minute now. Like for those that have been trading, you understand correlation. That gold and dollar relationship is broken right now. That gold and dollar relationship and stock market relationship is all messed up, and that is due to what? Inflation, deflation, that is due to war. That is due to supply and demand chains messing up with COVID. There's a lot of things that are very unprecedented that's happening right now. And the markets are showing things that people have never seen before, right? Bond yields are doing things that people have never seen before in the last 50, 60 years. So be warned, not everything is going to be answered, but we're trying our best to get close to the answer to arrive. We're using these little methods and ideologies to get us closer to the truth. And this is how we get closer to the truth. We don't want to over speculate. Keep it simple, very simple. We understand how to catch bullish and bearish trend. I have a whole 3-part series on how to find daily trend. It's a very simple process. Go on your daily chart, wait for a swing point to be broken, and see if you get a higher or see if you get a lower swing point. If not, the only result that you have is you got faked to the wrong side. That's the worst thing that could happen. Now you know it's a fake out. You should know that you should be going short or you should be going long. Sometimes you'll get consolidation like this. Like you're getting moments like this. February was choppy, and I didn't trade, and I knew better not to trade GU for February. I knew better not to trade GU for January. Look at January and February. Oh my gosh, horrible, horrible. Which is why we did U.S. oil for January. We did, I think, what did we did new after that? I'm not even sure what we did after that. We did something else, and we did something else, and we did something else. But GU was not on the top of the radar for the beginning of the month. Not at all. And now it is because I already did the other pairs, and now we have no choice but to do it. So, and then gold, right? Let's jump on to gold real quick. So this will be the last thing for tonight. Gold. So right now you can see I'm marking off. I'm expecting shorts, right? Chart is very clean. I marked off a swing high here. It's lower than this one. We had a false break on this swing high here. Comes up, runs a swing low here. Don't say I didn't show you this. If gold does go short, don't say I didn't show you this. False break. Where's the false break? Here. We'd call this a false break. Why? Call this a false break because after braiding it, it runs a swing low. Now, what is this? This is bearish momentum. Come on, D. And there we got that lower swing high. 1, 2, 3. After this lower swing high, what would I tell you to do? Wait for an up candle and go short. Look what happened the last 2 days. We got an up candle after this lower swing high. Lower swing high. This is like very picture perfect scenario that the patient trader would be waiting for. You got to be very patient for these things to unfold. These trends take a while to unfold sometimes, and sometimes it's quick. We got a lower swing high. This is the higher swing high. We failed to break this high, and we run back lower. We got a lower swing high after getting that 1, 2, 3. Let's bring it back right there. 1, 2, 3. That's the lower swing high, and it's confirmed. Little tip here about the swing points. This is something I learned from Larry Williams in his book. A confirmed swing point or turning point is going to have the low broken. The swing point itself, the low is going to be broken. That third candle or the fourth, whatever candle it does it on, it's going to break that swing point's low. And that really seals the deal that it's a confirmed lower swing high. So more than likely, price should not want to get back up here. It could, but more than likely, this should be a protected high. Price should not want to run that. What's the max pair of trades you trade at once? Two pairs. That is it. 2 pairs at a time. 2 pairs at a time. Actually, it depends. It depends. Like if things are hitting for it, like we caught that sweet swing trade back in what is it? Was it February? I think it was, yeah, February. Yeah, it was February. I think we went into UJ in February, I believe so. Or was it AJ? I can't even remember. I was trading literally all the N crosses. I went long in all the N crosses, and it played out pretty sweet. All the N crosses, we predicted that it was going to go higher. UJ, AJ, CAJ, and NJ. 4 pairs we traded. So most, though, it would be 2. 4, if you're experienced, the more the better, if you're experienced. But if you're not experienced, try to limit yourself to 1. Study 1 for 6 months out of the year because you want to see how this pair goes through cycles and goes through quarterly shifts and how it forms and just get a gauge of how it trades. And then after 6 months, maybe you want to trade another pair. And as you start to progress year after year, you start to trade other pairs and you like to pull and play. And that's how I like to do it. I've been doing this for 6 years plus now, so it's pretty routine. And the protocol is pretty simple, I have a binder. I'll take a picture and send it to the chat later tonight. I have a binder. I have a binder of all of like hundreds of agent session models, bro. Over and over and the same thing over and over again. Why do I do it? Just so I can reinforce the good habits. so that I'm not out here chasing things that I should not be chasing. If this is the golden setup, this is what we're looking for. High probability trading. You know the setup. It's high probability. Why are you not taking it? Why are you abandoning the model that works? Because you're chasing candy. You're chasing all these shiny things. It's not shiny. I know it's not flashy, but it's definitely worth your while. I'm telling you, if most people that did the back testing, this model, the Asian session model, 60% to almost 85% successful. And it only gets better when you start to narrow down the days. I don't mean to go back to another topic, but it only gets better when you start to narrow down the days. And we'll touch on that in a second. Question: if you are tracking the same pair month after month, do you change it? Yes, I change it. Every new month, we're going into a new IPTA. It's got to be another new 20, 40, 60 level every single time. It always changes. To add on, right? Great question. But to add on, does the previous month's IPTA levels just get disregarded? No, it does not, because we know the markets don't forget about levels. It's not that those levels are insignificant now. Let's say price did not get to last month's IPTA's 20-day high. Maybe this month that we're trading in, or lows, it gets to those IPTA level highs or IPTA level lows too. So it could still be significant in the near future. I just like the chart to be clean, and I like to keep it simple. You can keep those other IPTA levels on the chart, but eventually it's going to get messy. You're going to have a bunch of lines going across your screen. But if you keep it in mind, and you probably make it like less, you probably make it a little like you turn down how transparent it is, and you probably keep it on the chart just for reference sake, you know. But I always, every new month, we go in clean, go into the new month clean. Opening price of the month, 20, 40, 60 going back, and 20 going forward. Those 20 days going forward is crucial. It's game time, because it's basically almost 4 weeks, 4.5 weeks that we got to trade for the month. We only got four in a couple of days, 4 weeks and change sometimes during certain months to trade. Time is valuable. It goes by very quick. So if you're not paying attention, you can miss great opportunities. Remember, it's timing too. A lot of the successful traders, a lot of the successful people in the world will tell you it's not what they were doing. It was just the situation and the time. It was just a perfect storm. I started trading FX, or I started getting a better example. I started trading stocks in the 80s. I'm just making an example. Perfect storm. You know what I mean? Everybody was innovating. Industries were booming. New technology, great. Now you look at 2024, it's getting a little saturated. Everybody's doing the same thing, copying everybody's business model. So there's no innovation. Technology is slowly declining. There's inflation pressure. There was COVID. So things are a little different. There's situational shifts. It's the timing. So if you're not on your P's and Q's and you ain't watching this day to day, month to month, you will miss big opportunities that could pay up big, especially if you're a swing trader. And even if you're not a swing trader, you could miss opportunities of just great price action. Some months are not the same as other months. January is a terrible month to trade for most people. But we know from the data that we had, January was a walk in the park for the Asian model. Walk in the park for it. And like I said before, you can always optimize your trading. You could always fine tune your trading. And the way I started fine tuning my trading was being more specific in what I wanted to do. I'm not a mess. Maybe 5 years ago, I was a messy trader. This was on my chart. Indicators was on my chart. I was worried about this guy's trading style. This guy said this guy said that. I was like, man, let me figure something out. Let me just learn something. And I happened to come across ICT, and I was like, okay, I like it. Cool. It was working for me. And I was like, okay, let me keep going at this. Let me not give up. And eventually I found a breakthrough, and I was like, okay, I'm done. One model is all I need. I don't care about the 12 market maker models. ICT has more than 12 market maker models. You think people are really applying all 12 to the market? No, because they don't. line up in all situations, and it doesn't line up for all styles of trading. Me and you are totally different beings. Some of you guys may resonate with me. We may have common interests or similar personalities or whatever the case may be. But some of you guys may have completely different personalities to me and a whole different trading style, and this may not suit you as well. That's why I try to show the short-term trading, the long-term trading, the swing trading, the intraday trading. I try to give a blend of everything because I want to satisfy all demographics of trading. So hopefully you find that insightful, my man. Like, it's crucial, bro. Like, we could talk about this. This is a topic I love to talk about because this is what I do, bro. This is all I know myself to do. I get a new girl, bro. I'm telling her about trading because this is all I do. I meet a new friend, a new homie, bro. I trade. This is what I do. I'm passionate about this, bro. I'm telling you, when I hit the 10-year mark, bro, it's gonna be another ball game. You only get better over time, especially if you're learning something that's quality. There's a lot of garbage out there, bro. A lot of malarkey out there. A lot of nonsense crap out there that you shouldn't be paying attention to. We go on YouTube right now, bro. So clickbaity, and I ain't throwing shots at nobody. Let me see. Go on YouTube. It's something you figure out early on in your trading career. If you're someone that's paying attention and very globally and aware in how the markets will set things up. Will this thing even load? Come on, load YouTube. Just type in Forex, and I'm not sharing my screen. Give me 1 second. Look at this. Look at this. Look at this. Share tab. What do you see on my screen? Right? You're gonna see a lot of clickbaity stuff. Swaggy, I ain't gonna say much about man's. You know what I mean? Dude can't trade. But besides that, you'll see things like this. Clickbait, bro. 10 racks. Bro, I don't care about you making 10 racks. You got a trading plan? You got a model? Cool. You know what I mean? And I'm not trying to downshot anybody. Mamba FX. Disgusting. Disgusting. Um, like this. Money. Look at the clickbait, bro. Look at the thumbnail. You don't think psychologically people are gonna click on this video? Of course. Teenagers, people my age in their 20s that are the brokest point of their life. They want to make money. They're gonna click these thumbnails, bro. Let's keep scrolling. Let's keep scrolling. What do you see? Look at this. People making money. Ain't nobody showing no models. Nothing. How I went from $0 to $750,000 in 12 months trading FX, and I got a Lamborghini. Content. These people are selling you content. They're not selling you education. You got buy and sell stuff. Look at this. This is all clickbait. Then you start getting into the people like ICT, right? Genuine, real stuff. But notice the difference though. Look at the views. Which one got more views? Did ICT get more views or did Mamba FX get more views? Mamba got more views, bro. Look at the views. 533K. ICT 4 days ago, only 216K on this video. He's slowly getting up there. He's getting out there. But I just want you to see. Be aware. Don't be a sheep, bro. Pick your head up, bro. You're a wolf. You're informed now. You're an informed trader, right? You're gonna see a lot of this guy's legit. The transparent trader. I would recommend this channel. Legit guy. But yeah, that's the world we live in, right? That's exactly the world we live in. So be aware, man. Just be aware. Be aware, be aware, be aware, be aware, be aware. I ain't got much else to say, you know? That was NFP week. Y'all see how we do New York model and how it translates into NFP. Look out for the NFP series that's going to come out. I'm probably going to be one of the first or one of many or handful of many that is going to truly dedicate my life to trading and really put out quality information for people to look back 10 years from now. Even if FX is not a thing from now, at least people could look back and say like, damn, like that was a really memorable time, you know? So we're going to be doing NFP series. We're going to be doing live Asian sessions mainly on Thursdays and Tuesdays. I'm not sure which day I want to do it on. I think I'm probably going to mainly do it on Tuesdays and Thursdays. If I have time, I'll do both. But if I had to pick one, it would be Thursday. We'll do a live session on Thursday. Asian night, we'll do Zoom. We'll go live and we'll go long or short during Asian. And that's it, my friends. I appreciate everybody coming out tonight. I'm gonna get these videos together because I know the Wi-Fi cut in and out, so that they're probably clipped up. But stay tuned, stay safe. Hopefully, you guys are doing well. I wish the best for you and your loved ones. Peace. Yeah, I'll notify the Telegram channel. 100%. Love you guys. See you guys Monday. Back to work on Monday. All right. Peace.